Discuss the global effect of these tariffs. Michael Collins joins us. He's the CEO of WinCap Financial and adjunct professor at Endicott College. Great having you. You're a financial manager. How did you defend your clients from this week's losses?
Yeah, well, there was some places where there was no places to hide, which, U.S. equities were the biggest fallout of, this week's crisis. But at the beginning of the year, after a 2-year bull run, we rebalanced our clients' portfolios into bonds. So we got ahead of this. We couldn't have predicted when and why it would happen, but we de-risked at the beginning of the year, just given the run-up in equities and how overweight our clients were at the start of the year.
Interesting. And how do you expect your portfolios to evolve? Which assets will be the stars of the next few months?
I think bonds are really going to be a great place to investors to hang out in terms of where they should put their capital or where we'll see them put their capital. This is because bonds benefit from a lower interest rate environment. Bond prices generally will go up about 5% for every 1% in rate cuts, and you'll get coupons approximately that same 5% number while you wait on an annual basis. So with any amount of rate cuts plus collecting coupons, we think bonds could provide, anywhere from 5 to 10% returns over the next 12 to 18 months.
And do you see economic wins like the ones Trump is talking about?
I think the biggest win that could happen would be a complete reversal of all the tariffs that were announced. I think that would be the only short-term win we could see that would cause equities to rally.
I see. And how do you see emerging markets weathering this new reality?
Yeah, emerging markets could be the real winner here. As the U.S. kind of appears to put up walls on trade, this could give China and other countries an opening to increase their trade alliances across the world.
I see. And meanwhile, how do you see America's retirement accounts performing in the next few months, right? The 401ks that are always discussed in the media.
Yeah, a lot of people are in a mix of stocks and bonds in those accounts. So I think we'll see bonds do well and stocks kind of flounder until maybe Q4. We're going to enter guidance period for corporate earnings in about a week. And my concern for another catalyst down in equities is going to be a reduction of guidance, or companies just throw up their hands and don't give guidance at all because of the uncertain price environment.
Michael, beyond the Q4 of this year, do you see bonds as a long-term asset as well? And especially, I'd like to get your take on the yield curve, that everybody's expecting it to change in direction soon.
Yeah, as far as the yield curve goes, I think that there's a higher likelihood for a recession today than there was a month ago. Trump has been known to quickly reverse policies or strike a deal. So, you could see a pop in the market on Monday, which could evolve the market situation as well as the yield curve for something simple as like Vietnam getting their tariffs brought down to zero, which would be a positive catalyst.
I see. Michael Collins, thank